We're going to talk about the Friday's jobs report. We're going to talk about Charlie Munger and the secrets to wealth. What's going on with consumer sentiment, some earnings, all of that good stuff. And I have a very surprise announcement about 2 VIP tickets to our Vegas event. We will get to that in a minute. Folks, let's get into it. It is Saturday, I forget, what is it? December 9th, and we are doing the daily financial news because in about a half hour, I will be hosting day 8 of our boot camp. So I said, hey, why not? Let's go to the office a little early. Let's do a live stream of the daily financial news. And this little guy wanted to come up and say hi to you. Let's put him down. There you go, Sonny. There you go. So let's talk about Friday's job report. Remember, let's just rewind the clock. Tuesday, JOLTS report. Surprising to the downside, like 8.7, expectations 9.5, big miss. Fed is winning. On Wednesday, we got the ADP report, private payroll. Again, the Fed is winning. The big number was Friday. Expectations were 180,000. Actual, 199,000. So a beat to the upside. A couple of things behind this number. And let me just say this, the Fed is winning. The Fed went 3 for 3 this week. What does the Fed want? The Fed wants lower inflation, and the Fed would prefer not to blow up the jobs market. Seems simple enough. What did they get on Friday? They got a slight beat on jobs creation, although as we talked several times this week, it was a noisy number. According to Goldman Sachs, 38,000 of that 199 were strike related. Remember the auto workers, remember Hollywood, all of the things that we prepped you for was in that 199. More importantly, and I stress this as much as I can, the underlying numbers and variables of that job report were awesome for the Fed. What am I talking about? 1, wages. Wages are still going up. We do have wage growth above inflation, aka real wage growth versus nominal. That's good, but it is going up less fast. The last worry that the Fed has around inflation is this wage spiral. And that appears to be less and less likely. So again, the Fed is winning. On top of that, the Fed has for 9 months or so looked at the participation rate and wondered what the heck is going on. The participation rate ticked up to the highest rate in, I believe it was the last 12 months. It might be the last 10 months. So at the end of the day, the Friday's jobs report was exactly what the Fed wanted. And oh, by the way, the unemployment rate went from 3.9 to 3.7. Inflation's coming down. The job market is staying constant. So what happened in the market? Well, my hope is the market, the smart money, takes that Q1 rate cut off the table. That was ludicrous. At best, I have always thought you could think of one in the summer. But let's have this one more conversation, because as you know, I expect a Q1, Q2 recession. Not deep, not horrible, but a recession nonetheless. I want to be clear on something that I think some people don't understand. Let's assume no recession. Let's just go with me for a minute. No recession. Low growth, low trend, the soft landing happens. Some folks think the Fed can't cut if we don't have a recession. And I want to be very clear. That could be an error in judgment. Because what we will see starting next week with CPI reading is inflation is coming down. The expectation for CPI headline next week is 3%. 3. I'm going to go on record right now, this surprise Saturday session, and call CPI headline 2.9. I think CPI headline will be 2.9. It will have a 2 handle. So where am I going with this? If inflation continues to drift lower, the Fed could lower the funds rate to maintain the restrictive nature. If, for example, CPI headline falls to 2.5 by, say, April, that would be roughly 75 basis points in cuts the Fed could do and maintain the restrictive nature. Again, I think a lot of people think in order for the Fed to cut, you have to have a recession. And that is not the case. Not the case. So again, I think the Fed went 3 for 3 last week. Job openings down, ADP report lower, jobs report strong, not falling apart, unemployment down, participation up, wages softer. The Fed had a clean sweep. Let's see what happens on Tuesday with CPI. Again, headlines expected to be 3 and core is expected to be 4. Both of those are round numbers, 3.0 and 4. Let's talk about Munger. More and more articles about Charlie Munger. I found one particularly interesting. Charlie Munger talked about the secret to getting wealthy. I don't know about you, but when I see a headline like that, I will be clicking that article. Essentially in the article, Charlie Munger, this was really based on CNBC's last interview with him. CNBC was in the process of interviewing Charlie and was going to release it on his 100th birthday. That was the plan. Unfortunately, that didn't happen. He didn't make it. But this was from the video, or from the interview. He avoids the easy traps. For example, think about this. Think about this in your lifestyle. Charlie Munger was a billionaire. He stayed in the same home for 70 years. If you think about Olivia and I's experience, we stayed in the same entry-level condo with 0 upgrades for 15 years when we could have traded up a couple of times. Sometimes you have to, live below your means in perhaps the largest expense like your home. 2, he avoided crazy at all costs. During his investment career, which was 70 years, or more, 75, I think, there were lots of manias, lots of hoopla, lots of can't miss strategies. He avoided them like the plague. And then finally, he cut out toxic people. Folks, I can't tell you how important this is. Some of you still don't hear me. I know some of you are watching doomers and crash bros. Folks, I pay for vidIQ. I went to vidIQ yesterday. I looked at the top 10 channels that my followers watch. I have great news. 6 months ago, there were 5 crash bros in my top 10. I was so disappointed. Today, there's only 1 left. And 6 months ago, this channel was the number 1. Today, it's number 8. So we only have to flush the king of all crash bros out, and we can keep moving forward. I am not here as a housing bull. I am here as someone that says, do the work, learn average, own your destiny. Your job's the key to your financial freedom. I'm not some, I get accused by the doomers and crash bros of being a housing bull. When did flat for 3 or 4 years become the bull scenario? I want you to know you can do it. You can do it. Stop listening to poison. It's holding you back. It's like you're swimming in a pool or treading water and you have a 20-pound backpack. What the hell are you doing? Drop the backpack. You'll survive longer. Pretty crazy. Cut out toxic people. Consumer sentiment. Wow. Friday. You would have thought the jobs number was the most important. I got to tell you, the consumer sentiment and consumer expectations on inflation blew me away. Both exceeded expectations. Consumer sentiment. It was, and again, these numbers, You don't care what the numbers are. You care about the direction and the magnitude. Here we go. Last month, consumer sentiment was 61.3. Okay, great. What does that mean? It means absolutely nothing. What was the estimate? 62. So again, a higher number means consumers are feeling better. 62 is bigger than 61.3. What happened? 69.4. Huge beat. Consumers feeling better. Gas is down. Holiday season. Jobs are out there. Who knows what it is? Consumers are feeling better. Why is that important? Consumers feel good. Consumers spend. On that front, it is estimated that you watching this will spend $975 on holiday shopping. A month ago, it was estimated to be about $900. So we feel better. We are estimated to spend more money as an example. Consumer sentiment was a barn burner great number, but it wasn't the most important. The most important was inflation expectations. One of the things outside of wage spiral that the Fed is looking for is inflation expectations. Why? Because if we, the consumer, anticipate inflation, we change our behavior. So for the longest time, consumer expectations of inflation were anchored high. For example, last month they were 4.5. 4.5. Today we're at 3.2, and by next week it could be 3 or 2.9. So again, anchored at 4.5. That's a problem for the Fed. What just happened? A complete collapse. A complete collapse. Down to 3.1. Folks, oil as of last week was sub $70, I think. Gas is down at like a 9 or 10 or 12 month low. Consumers are simply feeling better. This, I haven't said this before, but this certainly feels like the making of a successful soft landing. A couple other things I noted. Looks like California has a record budget deficit. It is estimated that California has a $68 billion deficit. That is crazy to think about. It looks like a lot of unicorns in the private equity space, unicorns being companies valued over $1 billion, are now zombies. They are running out of time and money. Here is an example. This is exactly what I saw coming, and this is what happened to one of the companies I was at in 2000. We were sold for parts because we missed our window. Let me make sure I get this number. There was a company called Hopin, H-O-P-I-N. Hopian? Whatever. H-O-P-I-N. It had raised $1.6 billion on a $7.6 billion valuation. The company's worth 7.6 at a moment in time when money is free. It just sold its main business for $15 million. Ouch! Ouch! Ouch. More and more of those are coming. It looks like 3,200 companies have gone bust. Venture-backed have gone bust already, with a lot more to come. All right, let's talk about some quick earnings and we'll get into those 2 VIP tickets. RH. Remember, RH Restoration Hardware was a company I focused on earlier in the week. What is going on, right? RH is a expensive, high-end, furniture provider, that kind of stuff. Well, they had a disaster. They reported a loss, so not even a profit. Missed top line, meet bottom line, reported a loss. Folks, the luxury buyer clearly is pulling back. The luxury buyer, especially in real estate. How about Lululemon? Lululemon beat top line, beat bottom line, but gave a weak guidance. Again, I would call Lululemon high-end athletic gear. The consumer is pulling back. The well-off consumer is pulling back, according to their CEO. How about Honeywell? Well, just the other day, I said the next 12 months is going to be the year of acquisitions, right? Mergers and acquisitions. Honeywell, not to disappoint, announced a $4.95 billion acquisition of Carrier Security. Folks, the next 12 months, lots of mergers and acquisitions. That's what I think 2024 is going to be all about. And then finally, Broadcom. Broadcom is saying that enterprise spending is down. I know the All In podcast and David Sachs said the software recession is over. Well, if you look at Broadcom's earnings, Broadcom would disagree. Although Broadcom's probably more of a hardware company, I would guess. But yes, it looks like enterprise spending is still down. All right, now to the 2 VIP seats. Folks, we had somebody who had bought 2 VIP tickets reach out to me. They can no longer make it. They have family obligations or something that means they can't come to Vegas. First and foremost, I gave them a full refund, no fees, no nothing. Gave them all their money back. And now we have 2 VIP tickets available. Remember, VIP tickets, $4.99. What do they get you at a minimum? They get you fed, lunch, dinner, lunch. But more importantly, you're going to be in the room with all the millionaires having lunch and dinner. So it'll be easier to network, easier to ask questions. It's just a more intimate setting. There will be other goodies, other surprises I have coming. But if you want to be at the event, surprise, we have 2 VIP seats available. And then finally, for the $99 virtual session, if you go to the Eventbrite link, I just put in the agenda. So you can take a look at what speakers you want to attend live. You can look at which ones you'll watch later recorded. Because again, if you spend $99, not only do you get access to both days, but you'll also get the recording. That is something I am paying buku bucks for. So time to sign up. 13 of you have signed up already. I know a lot more of you have told me you want to attend virtually. I did it just for you. Time to sign up below, $99. Go check out the agenda on the Eventbrite link. And first come, first serve for those VIP tickets. I hope to see you there. Bye.